Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ecolab Inc. Annual Report. Ecolab Inc. offers a diverse range of businesses and services that cater to various industries worldwide. At the core of its operations are four primary segments: global water, global institutional and specialty, global pest elimination, and global life sciences. The company's global water segment provides essential solutions for water treatment and process applications across multiple sectors, including manufacturing, food processing, transportation, and energy production. This segment is crucial in ensuring the cleanliness and safety of water used by various industries. In addition to its water-related services, Ecolab also offers cleaning and sanitizing products through its global institutional and specialty segment. This segment caters to a broad range of customers, including food service providers, healthcare facilities, hotels, government institutions, educational establishments, and retail businesses. The company's pest elimination services are another key area of focus for Ecolab. Through its global pest elimination segment, the company provides comprehensive solutions to detect, prevent, and eliminate pests in various settings, such as restaurants, food processing plants, hotels, grocery operations, and healthcare facilities. Ecolab also serves the pharmaceutical and personal care industries through its global life sciences segment. This segment offers specialized cleaning and contamination control solutions to ensure the quality and safety of products manufactured by these companies. Overall, Ecolab's diverse range of businesses and services makes it a leading provider of water, hygiene, and infection prevention solutions globally. Ecolab Inc.'s stock price has experienced a moderate increase in the past year, but not at the rate specified. According to available data, the company's closing stock price rose from $265.58 on February 24, 2025, to $305.67 as of February 23, 2026, representing an increase of approximately 15.09%. This growth is consistent with other reports indicating increases of 15.87% and 14.91% over the same period. Despite this moderate growth, it is not possible to identify specific news events that caused the stock price to exceed a 16.23% increase within the past year. The data suggests that Ecolab Inc.'s stock price has been steadily increasing, but at a rate below the specified threshold. Ecolab Inc. market capitalization of $87 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that Ecolab Inc. holds a significant advantage in their industry. Ecolab Inc. trades at a higher price-to-earnings ratio of 42 times and a higher price-to-book ratio of 13.03 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline are multifaceted and vary across different segments and geographic regions. In terms of revenue growth, the global institutional and specialty segment stands out with a significant increase due to a fixed currency rate change. This segment's revenue grew by 14.6% in 2023 when valued at 2024 rates. Another segment that experienced revenue growth is the global pest elimination segment, which saw an increase of 2.5% in 2023 when valued at 2024 rates. On the other hand, the global water and life sciences segments faced declines in revenue. The global water segment's revenue decreased by 4.1%, while the global life sciences segment experienced a significant decline of 59.6%. Geographically, all regions except Canada saw increases in long-lived assets, net, Customer relationships and technology were also significant drivers of revenue growth, contributing $444.5 million and $131.2 million respectively. However, revaluation gains or losses on cross-currency swap derivative contracts had a negative impact on revenue, totaling $216.1 million in 2025. In conclusion, the primary drivers of revenue growth and decline are complex and influenced by various factors such as currency rate changes, customer relationships, technology, and geographic location. Understanding these drivers is crucial for businesses to make informed decisions and navigate the ever-changing market landscape. The net income of Ecolab experienced a significant increase from $1.37 billion in 2023 to $2.11 billion in 2024, representing a growth of $740 million. However, this trend was reversed in 2025, with the company's net income decreasing by $36.8 million compared to the previous year. The profit margins of Ecolab also underwent changes during this period. The net income margin increased from 8.9% in 2023 to 13.4% in 2024, indicating a significant improvement in profitability. However, it declined slightly to 12.9% in 2025. Similarly, the operating income margin showed an upward trend, increasing from 13% in 2023 to 17.8% in 2024, before decreasing to 17% in 2025. The segment profit margins of Ecolab's business units also experienced fluctuations during this period. The Global Water and Global Institutional and Specialty segments showed a decline in their profit margins, while the Global Pest Elimination segment remained relatively stable. However, the Global Life Sciences segment reported negative profit margins due to a significant decline in net sales and operating income. The decrease in net income and profit margins in 2025 can be attributed to various factors, including changes in market conditions, competition, and operational efficiency. Despite this setback, Ecolab's overall performance remains strong, with the company continuing to expand its global presence and diversify its product offerings. The company is indeed generating positive operating cash flow, as evident from the various financial statements and projections provided. On page 26, it is stated that cash flow from operating activities increased to $3 billion in 2025 compared to $2.8 billion in 2024. Furthermore, on pages 41 and 52, the cash provided by operating activities for both years are listed, with a notable increase of over $138 million in 2025. Additionally, page 61 highlights that operating cash flow is expected to remain strong, reaching $673 million in 2025 compared to $635 million in 2024. However, it's worth noting that on page 68, net cash payments were reported at $1.2 billion during 2025, which may seem counterintuitive given the positive operating cash flow. Nevertheless, this can be attributed to various factors such as investments or other business activities. Lastly, on page 103, the company's net cash flow from operating leases is listed at $336 million in 2025, further supporting the notion that the company is generating a significant amount of operating cash flow. Overall, these financial statements and projections demonstrate that the company is indeed producing positive operating cash flow. The company's debt level and interest expenses have undergone significant fluctuations over the years. Initially, the total debt increased by 8% from $7.6 billion to $8.2 billion between two periods. However, a closer examination reveals that short-term debt rose by 41%, while long-term debt saw a modest increase of 6%. Conversely, in another period, the total debt decreased by $196 million, with long-term debt experiencing an even more substantial decline of $584 million. Despite these variations, one consistent trend is evident. Interest expenses have consistently decreased. Between two consecutive years, interest expenses dropped by $41 million and then further reduced by $44.9 million in the following year. This downward trend continued, with a decrease from $282.5 million to $241.1 million over another period. The only exception was a slight increase in one instance, but overall, interest expenses have shown a significant decline. The financial performance of the company was mixed across various segments and regions. The Global Water segment stood out as a top performer, with net sales increasing by 3% in 2025 compared to 2024. This growth was driven by strong performances from operating segments such as light and heavy, food and beverage, and paper. The global institutional and specialty segment also delivered impressive results, with operating income increasing by 16% in 2025 compared to 2023. Additionally, the global pest elimination segment saw significant growth, with net sales rising by 7% and operating income increasing by 13%. On the other hand, the global life sciences segment struggled, with net sales declining by 5% and operating income decreasing by 23%. The corporate segment also experienced a decline in performance, with an operating loss of $353 million in 2025 compared to $329 million in 2023. Geographically, the United States and Europe were strong performers, with net sales increasing by $108.4 million and $67.4 million, respectively, from 2024 to 2025. The Greater China and Asia-Pacific regions also performed well. In contrast, Latin America saw a decline in net sales, while the India, Middle East and Africa region struggled. Management is signaling a cautious approach to the company's future prospects. Despite having a global presence with significant international sales, they are acknowledging vulnerabilities to economic fluctuations and foreign exchange rates. To mitigate these risks, they are expanding their restructuring program and hedging against currency and interest rate risks through derivatives. In terms of strategy, management appears focused on optimizing cash flow generation and managing financial risk. They continue to generate cash from operations, which is being used to fund ongoing operations, investments, and shareholder returns. The company also aims to repurchase all remaining authorized shares under its share repurchase authorization, subject to market conditions. While there is no clear statement on the overall strategy or outlook, management's actions suggest a commitment to prudence and risk management. They are taking steps to balance asset growth with maintaining reasonable levels of risk, as evidenced by their tax strategy, which has resulted in a decrease in their effective income tax rate. Overall, management's approach appears to be one of caution and financial discipline. The company has a long history of rewarding its shareholders through dividends and share buybacks. For 89 consecutive years, the company has paid cash dividends to its common shareholders, demonstrating its commitment to returning value to its investors. In addition to paying dividends, the company has also been actively buying back shares. In 2025, the company repurchased a total of $784 million worth of shares, with a significant portion of this amount being spent on share buybacks in that year alone. The company's share buyback program has been ongoing for several years, with notable purchases made in both 2024 and 2025. These efforts to reduce the number of outstanding shares have likely had a positive impact on the company's earnings per share and overall financial performance. Concerns about inventory buildup and supply chain disruption have been raised in recent times due to various global events. The COVID-19 pandemic has posed significant challenges to supply chains, while geopolitical instability has further exacerbated these issues. Additionally, constraints on commodity availability, tariffs, and trade policies have the potential to increase costs and reduce sales. The volatility of raw material costs and availability has also been a concern, with economic conditions affecting suppliers. Furthermore, an analysis of confirmed obligations outstanding at the end of the year revealed a significant increase from $39.9 million to $61.2 million. This indicates potential concerns about inventory buildup or supply chain disruption, which could have far-reaching consequences for businesses and economies alike. The uncertainty surrounding these issues highlights the need for companies to be proactive in managing their supply chains and inventory levels. By doing so, they can mitigate potential risks and ensure business continuity. However, without specific information on current inventory levels and supply chain operations, it is difficult to assess the full extent of these concerns. That concludes the financial summary for Ecolab Inc. Feel free to comment below, and I will be happy to answer them when possible.